What's up, D-Gens? It's your boy Max from Trades and Gains. I'm here to give you another market recap, and it looks like today our rally smelled more like relief than an actual reversal. Trump cracked the tariff door open, tech ripped, and options flow lit up like Times Square. Let's break it all down. The trades, the traps, the dark pool bombs, and what Wall Street's whispering heading into this week. Go ahead and buckle up, grab your favorite drink, coffee, food, whatever, because we got a lot to get into today. So, what happened today? That's a great question. The S&P 500 had a pop of about 1.76%. The Dow jumped about 1.42%, and the Nasdaq was the winner of the day with a 2.27% pop, which just shows that tech was absolutely ripping. And there's one reason only to thank for today's rally or reversal, and that is Donald J. Trump. Around 2 p.m., he dropped the line that lit the match. We may give a lot of countries breaks. We may take less than what they're charging us. The translation of that statement: the feared Liberation Day tariffs set for April 2nd might not be the broadside markets expected. The uncertainty has been choking equities. Now, just a whiff of less pain was enough to turn shorts into cover rats and tech into rockets. Now, let's go ahead and talk about some of our big tech surges from today. We had Tesla that ripped about 11.9% on the day, which was our top gainer in the Nasdaq. Now, why did this happen? Rumors Trump may spare autos from tariffs, add in new Teslas. Full self-driving is inching toward China regulatory approval, and boom, you got a double tailwind to let the stock surge back up. NVDA was also up 2.3% as Jack Ma's Ant Group said it's slashing AI chip costs with alt silicon. Read demand curve still steep even without NVIDIA monopoly in play here. And we also had AMD, which jumped 6.9%, and not because it did anything groundbreaking, but just because it isn't NVIDIA. Lower cost AI chips, that's AMD's lane, and also computer parts and like computer components as well. Now let's go ahead and head over to Investor Central Club and see what some of our action in the market today looked like. Hope y'all are having a great day today, by the way. We're just kind of hanging out right now. But let's go ahead and dive straight into this. And it looks like, to kick things off, SPY, we had 78 million in total premiums today with 31 million in calls against 47 million in puts. It's not bearish directionally. Most of this was hedge style, short dated, May 16th expiry, 555 strikes. So it looks like the bulls might be stepping back into the arena to pump SPY again. We also had Apple with, where was Apple at? 8.4 million in premiums with 6 million in calls against 1.1 million in puts. It looks like the most popular were the December 19th 270 calls with a $4 million sweep. That's a 9-month timetable. Someone's betting Apple will break through this funk eventually. Tesla is another notable that we had on the day. We had 50 million in total overall flow with 25 million coming in calls, 24 million in puts. And the 320s for June and 300s for April are getting stacked up with repeated hits across the tape. There's a big bet on a reversal continuation for the EV maker. And then we had Mr., which had 23 million in total flow with 22 million in calls against 1.4 million in puts. We had multiple bullish plays at the $220 and $330 call sweeps. And Bitcoin is over 88K plus MicroStrategy here equals option heat for MSTR here, folks. Now, we also had some dark pool activity today. We had VU with 529.78 million. And we saw that print hit 10 times. No, so we saw Yeah. Wow. Yeah. VU was printing today. It had billions injected into it. Massive moves being made into that. NVDA, we had 121. We had the 121.41 spot where 3.6 million shares were bought for about a $448 million premium. Same levels, repeat prints. It's likely an accumulation from the big guys upstairs. In SPY, at the 571.44 level, we had a $492 million print, and this matches the key resistance zone for SPY. The pattern here is institutions were buying risk today, not panic selling. These blocks are too clean and too consistent. That means one of two things are happening. Funds are positioning ahead of earnings, and they're betting the tariff scare is overdone. Now, let's go back and talk about some of our market sentiment. Other earnings to watch this week, by the way, we have Lululemon, GameStop, Dollar Tree, and KB Homes. And again, guidance is playing a huge factor nowadays, so don't just look at what EPS and revenue came at. You need to see what their guidance is going to look for as well. Now, let's not get it twisted. This rally, it's short covering and relief, not conviction. VIX is still elevated. Breadth was solid today, but still lopsided. 70% of volume came from just 20 stocks today, so it was a very low volume day. And Trump's tariff tweet could flip tomorrow. And this all completely falls down like a house of cards. Q1 earnings are going to start rolling in 2 weeks, and that's when the real test is going to hit. Now, again, some earnings and data to watch this week. Tuesday, we have Conference Board Consumer Confidence. Wednesday, we have durable goods. Thursday, we have final GDP revision. And Friday, we have PCE inflation, the Fed's favorite flavor. The PCE number Friday is the main course. If inflation stays sticky, Powell's wait-and-see game gets riskier. Now let's talk about what Wall Street is whispering about. Hedge funds are light risk, high cash. Retail is still buying the dip for some reason. Quant desks, net long, but hedging with short-dated puts as well. This isn't a bull market per se. This is a trader's market. And days like today with a strong narrative, a sharp trigger, and monster flow are exactly the kind of setups you look for. Now, markets don't need good news. They just need less bad news, especially in today's climate. Today's Trump might go easy comment was all it took to ignite a 2% rally. But don't forget, the same guy could drop a tariff bomb on Taiwan chips tomorrow. Trade what's in front of you, respect the flow, and keep your eyes on Friday's PCE report. Because this rally, it might just be the appetizer to something bigger. That's your full breakdown for today, folks. If you're tracking the tape and want these updates daily, make sure to like, subscribe, and hit the bell so you never miss a Trades and Gains video. Until next time, stay sharp, stay skeptical, and always follow the money. See you guys in the next one.